All right, let's dive right in. You want to understand Cholamandalam Financial Holdings Ltd, and you've sent over a whole stack of intel, a press release earnings report, the works. We've even got an auditor's report and a presentation deck. Someone's serious about getting to know this Indian financial giant.
It seems like you're looking for more than just numbers. You want to grasp their strategy, their position in the market, vehicle finance insurance, risk management, the whole picture. That's where we come in.
Exactly. These reports can feel like a maze, but honestly, the more I skimmed, the more curious I got. Let's start with the basics. What is Cholamandalam Financial Holdings Ltd? CFHL.
Imagine a massive tree, deeply rooted. That's the Murugappa Group, a 124-year-old conglomerate with businesses spanning agriculture, engineering, and of course, financial services.
Yeah.
Cholamandalam Financial Holdings is like a main branch on that tree, a core investment company holding majority stakes in other companies.
So not just a parent company, but part of a dynasty.
Yeah.
And these holdings, what companies are we talking about?
Three major players. First, there's Cholamandalam Investment and Finance Company Limited, CIFCL. They're the engine room, the vehicle financing powerhouse. Trucks, tractors, construction equipment, if it moves, they probably finance it.
Got it. So that's where the rubber meets the road, literally.
Yeah.
What about the other two?
We've got Cholamandalam MS General Insurance Company Limited, CMSGICL, a joint venture bringing in the expertise of Japan's Mitsui Sumitomo Insurance Group. They cover everything from personal to commercial insurance needs. And then there's Cholamandalam MS Risk Services Limited, CMSRSL, another Mitsui Sumitomo partnership focusing on risk management and engineering solutions. They help businesses assess and mitigate risks, ensuring they're prepared for anything.
So taken together, these three companies create a pretty diverse and well-rounded portfolio, right? Not just loans, but protection and risk assessment too.
Exactly. That diverse portfolio is one of the things that makes Cholamandalam so fascinating. They've strategically positioned themselves to be a one-stop shop for financial services, especially in a dynamic market like India.
All right. Background acquired. Time for the good stuff. How did they actually perform in Q2 of FY25?
Prepare to be impressed. Their consolidated revenue jumped a staggering 28% year-on-year, hitting 8,180 crore rupees. Profit after tax soared 27% to 1,125 crore rupees. And earnings per share, up 25%, reaching 27.99 rupees.
Those are some serious gains, and we're only talking about one quarter.
It gets better. For the first half of FY25, revenue growth is at 31%, profit growth at a whopping 36%, and NPS matches that 36% jump.
Okay, they're definitely doing something right. But is this strong performance across the board, or are certain segments carrying more weight? You mentioned CIFCL as the engine room. Are they the star of the show?
They certainly play a major role. CIFCL brings in the lion's share of the profit. They're a key driver of Cholamandalam's success, and we'll get into the specifics of why that is a bit later.
Okay, keeping me in suspense. What about the insurance side, CMSGICL? Are they holding their own?
Absolutely. They're showing solid gains and contributing significantly to the bottom line. They're a steady performer playing a vital role in the overall health of the company.
All right, let's zoom in on CIFCL then. What's the secret sauce behind their success?
Well, for one, they're not afraid to lend. In the first half of FY25 alone, they disbursed a massive 24,314 crore rupees in loans. Their total assets under management stand at a jaw-dropping 177,426 crore rupees. And with over 1,500 branches across India, their reach is incredible.
Wow, they're everywhere. But it's not just about throwing money around, right? They must have a solid risk management strategy to handle that volume of lending.
Yeah, absolutely right. And that's where their deep understanding of the Indian market and the nuances of each segment come into play. They provided some fascinating insights into the trends they're seeing in the vehicle market and how they're adjusting their approach accordingly. We'll definitely delve into that in more detail later on.
Color me intrigued. But before we get to those juicy details, I'm curious about their other lending activities. What about loans against property and home loans? Are those areas where they shine too?
They're definitely seeing strong growth in those areas. Take loan against property, LAP, for example. Disbursements in Q2 skyrocketed 35%, and their asset under management for LAP is up a whopping 41% year-on-year.
Wow, those are some impressive numbers. What about home loans? Are they riding the wave of the Indian housing market?
They are indeed. Home loan disbursements increased by a healthy 16%, with AUM surging 47%. And here's the kicker. Loan losses are minuscule for both LAP and home loans, indicating a very healthy portfolio.
Sounds like they've struck a winning balance between growth and risk management. Okay, CIFCL is clearly a force to be reckoned with. Now let's circle back to CMSGSCL, the insurance arm. You mentioned they were doing well, but I'm curious about the specifics. What kind of growth are we talking about?
Their gross written premiums for the first half of FY25 exceeded 4,136 crore rupees, representing a year-on-year growth of over 11%. And here's the kicker. They're not just keeping pace with the overall insurance industry in India. They're actually outpacing it in key segments like fire and health insurance.
Uh-huh, so they're not just riding the wave, they're actively grabbing market share. Impressive. So we've got strong revenue, healthy profits, and impressive growth across different segments. But what about their overall financial health? Are they in a strong position to sustain this upward trajectory?
That's where we shift from the highlights to the nitty-gritty
Yeah.
and where those credit ratings and capital ratios you mentioned earlier become critical.
Lead the way. I'm ready to get into the financial nuts and bolts. Okay, time to put on our financial analyst hats. You mentioned credit ratings and capital ratios. What story are those telling us about Cholamandalam's financial health?
Well, think of credit ratings like a company's financial report card. Cholamandalam boasts excellent ratings, meaning lenders have high confidence in their ability to repay debts. It's a green light for better financing options and signals to investors that they're managing their finances responsibly.
So, good credit opens doors and builds trust that makes sense. What about this capital adequacy ratio? I'll admit financial jargon sometimes makes my head spin.
Imagine a sudden downpour. You want a big, sturdy umbrella, right? That's what the capital adequacy ratio is like for a company. It measures their ability to absorb losses, like a sudden increase in loan defaults. A higher ratio means a bigger umbrella, more capital to weather unexpected financial storms. And Cholamandalam's ratio way above the regulatory minimum.
So, they're prepared for a rainy day, financially speaking. What else jumps out at you from their financial statements?
Their funding sources? They've got a healthy mix of bank loans, market borrowings, and even capital reserves. It's like diversifying your investments, not putting all your eggs in one basket. This approach helps mitigate risk and ensures a stable flow of funds regardless of market fluctuations.
Diversification, always a good strategy. You also mentioned their ALM statement. I'm guessing that stands for Asset Liability Management, but what does that actually tell us?
Think of it like a personal budget. You need to make sure your income covers your expenses, right? The ALM statement does the same for a company. It ensures they have enough liquid assets on hand to meet their short-term obligations. It's about matching up incoming cash flows with outgoing payments. Cholamandalam's ALM statement paints a very clear and positive picture of their cash flow situation. They're managing their money wisely, ensuring they can pay their bills on time and avoid any financial hiccups.
All right, so they have strong credit, a healthy capital cushion, a diverse funding mix, and they're managing their cash flow effectively. It sounds like they're in a good place. But now I'm itching to get back to that vehicle financing engine. You mentioned they're dispersing loans like crazy, but how is that translating into actual performance?
Remember, CIFCL is the driving force here. Their Q2 performance in vehicle financing was strong. Disbursements grew 5% compared to the same period last year, reaching 12,336 crore rupees. For the first half of the year, they disbursed a total of 25,102 crore rupees, a 9% increase year on year. Their assets under management in this segment are also booming, hitting 92,012 crore rupees by the end of Q2. That's a 22% increase compared to last year.
So more loans, bigger portfolio, things are looking up. But with all that lending, are they taking on too much risk? What do their loan losses look like?
That's the key question, isn't it? You want growth, but not at the cost of reckless lending. In Q2, loan losses did tick up slightly to 1.8% compared to 1.7% in the same quarter last year.
A slight increase? Is that a cause for concern?
It's worth keeping an eye on, but the overall level is still relatively low, especially considering the volume of loans they're disbursing. Remember, they're in the business of lending, so some level of loss is expected. It's about managing that risk effectively, and it seems they're doing a good job of that.
Good point. As long as they keep those losses in check, it's a calculated risk. But are these loans actually turning into profit?
Absolutely. Profit before tax for Q2 in vehicle finance jumped by a healthy 26%, hitting 631 crore rupees. For the first half of the year, PBT surged 25%, reaching 12,251 crore rupees.
All right, the vehicle financing engine is definitely firing on all cylinders. You mentioned earlier that Cholamandalam had some interesting insights into specific trends they're seeing within the vehicle market. This is where it gets really interesting for me. Can you break it down?
What's fascinating is their nuanced approach. They're not just blindly lending money, they're carefully analyzing each segment of the vehicle market and tailoring their strategy accordingly. For instance, they've observed a slowdown in the commercial vehicle segment, particularly heavy commercial vehicles, which declined by 15% in Q2.
That makes sense. I've read reports about that slow down things like lower infrastructure spending and erratic monsoons impacting sectors that rely heavily on commercial vehicles like agriculture and transportation.
Exactly. Those are the very factors they highlight. They're treading cautiously in this segment, focusing on specific niches where they see more stability. and carefully monitoring industry developments.
So they're not shying away from challenges, but adapting their approach? Makes sense. If commercial vehicles are hitting a bit of a speed bump, what segments are showing more promise?
The passenger vehicle segment is still seeing growth, though it might not be as robust as in previous years. They're noticing a slight slowdown in car and MUV sales, which they attribute to a high base effect from the previous year. Basically, they're comparing current sales to a period of exceptionally strong growth, so the slowdown isn't necessarily alarming.
So after a period of high-speed growth, things might be leveling off a bit, but it's not a reason to panic. What about two-wheelers? They're a massive part of the Indian market.
And they're booming. The two-wheeler industry saw a 13% growth in Q2, driven by festive demand and improved cash flow in rural areas. Festive seasons are a big deal in India, and that spending power is translating into strong two-wheeler sales.
That tracks. Every festival seems to bring a wave of new vehicles on the road. How is Cholamandalam capitalizing on this trend? Are they offering special financing deals or promotions during festivals?
Well, they're certainly seeing strong demand in the two-wheeler segment, but they're not just chasing volume. They're prioritizing portfolio quality and profitability. They're very strategic about who they lend to, ensuring they maintain healthy margins and don't compromise on risk management, even during peak seasons.
So it's about sustainable growth, not just chasing quick wins. Smart move. Any other interesting trends they've highlighted?
The rise of used vehicles.
Yeah.
New vehicle prices have been steadily climbing, making them less accessible for some buyers. Used vehicles offer a more affordable alternative, and the availability of organized financing options has made purchasing them easier.
That makes perfect sense. So it's a combination of affordability and easier financing that's fueling the used vehicle market. What's Cholamandalam's strategy in this segment?
They see it as a key growth area, but they're not rushing in blindly. Their focus is on robust collection processes, ensuring they can recover loans and manage risk effectively.
So proceed with caution, but don't miss out on the opportunity. We've covered commercial vehicles, passenger vehicles, two-wheelers, and used vehicles. Anything else?
They also provided insights into construction equipment and tractors, two segments that are closely tied to the Indian economy.
Those seem like pretty niche markets. What's happening there?
Construction equipment, as you might imagine, is directly linked to infrastructure spending. They saw flat growth in this segment in Q2, which suggests that government spending on projects like roads construction and mining might be a bit slow. It's a reflection of the broader economic climate.
Right, that aligns with what we were discussing earlier about the headwinds in the commercial vehicle market. It all ties together. What about tractors?
Tractors are interesting because they're closely tied to the agricultural sector, which is heavily dependent on the monsoon season. They saw marginal growth of 1% in Q2, which they attribute to the monsoon's impact on agricultural output.
So the tractor market is basically at the mercy of Mother Nature.
You could say that Cholamandalam is well aware of this and is taking a cautious approach, carefully assessing crop yields and gauging rural cash flow before extending loans. They're not just looking at numbers, they're factoring in the realities of the agricultural cycle.
It's impressive how they're adapting their lending practices to the unique dynamics of each segment. It's not just about crunching numbers, it's about understanding the bigger picture. Now, besides this fascinating breakdown by vehicle type, is there anything else in their overall strategy that stands out to you?
Well, they actually provide a really cool visual map that shows their positioning within each vehicle category. It highlights their target customer and risk appetite. It's a great way to visualize their approach.
Okay, let's unpack that map. I love seeing how companies visualize their strategies. Who are they going after in the commercial vehicle space?
They're targeting a broad spectrum, from large fleet operators to first-time buyers. But their sweet spot seems to be the middle of the pyramid. Micro and small enterprises, those operating in the agricultural sector, folks needing new and used commercial vehicles. They're supporting the backbone of the Indian economy.
It's great that they're recognizing the needs of those businesses and providing them with access to financing. What about their risk appetite in this segment? How are they balancing growth with prudence?
It's a nuanced approach. For larger operators with a proven track record, they might be willing to take on more risk, offering more favorable terms. But for first-time buyers, or those operating older vehicles, they're more cautious, maybe requiring a larger down payment or charging a slightly higher interest rate. It's all about assessing the borrower's experience and financial stability.
So they're not just throwing money around, they're making calculated decisions based on a range of factors. Makes sense. What about the passenger vehicle market? Who are they targeting there?
In passenger vehicles, their focus is on salaried individuals and those who can demonstrate a steady income stream. They're also looking at the intended use of the vehicle. For instance, they might be more willing to finance a car for personal use compared to a vehicle being used commercially like a taxi.
Again, it's about understanding the specific needs and risk profiles of different borrowers. What about tractors? That seems like a very specific and specialized customer base.
It is. They're mainly targeting farmers, both large and small, and they're really digging deep to assess creditworthiness. They consider factors like land ownership, crop yields, and the farmer's experience in agriculture.
So they're not just looking at financial statements, they're getting their hands dirty understanding the intricacies of the agricultural market. It's impressive.
Okay, we've covered a lot of ground on vehicle financing. Let's shift gears to their loan against property LAP business. You mentioned earlier that it was experiencing rapid growth. Can you elaborate on that?
Absolutely. LAP is another area where Cholamandalam is shining. Q2 disbursements surged by a remarkable 35% year-on-year, hitting 4,295 crore rupees. Wow, that's even faster growth than their vehicle finance segment. What's fueling this surge in LAP lending?
There are a few things at play. First, there's a huge demand for LAP loans, particularly in smaller cities, where people are increasingly using their property as collateral to access funds for things like business expansion or education.
So they're tapping into the aspirations of people in those cities who are looking to build a better future. They're providing them with the financial tools to achieve their goals.
Exactly. And Cholamandalam is strategically expanding its reach into these markets, opening branches and building relationships to capture this growing demand.
So they're not just sitting back and waiting for the business to come to them. They're actively going out and seeking new opportunities. What else is contributing to their success in the LAP segment?
Well, their asset quality in the LAP segment is steadily improving thanks to their strengthened collection and legal processes. This means they're better equipped to recover loans and minimize losses, which ultimately boosts profitability.
That's a critical aspect of any lending business. You need to have a robust system in place to manage risk and ensure you're collecting on those loans. What about their asset under management and profitability in the LAP segment?
Their AUM for LAP has grown by an impressive 41% year-on-year, reaching 34,824 crore rupees by the end of Q2. And their profit before tax in the segment surged 26%, hitting 295 crore rupees.
So the LAP segment is clearly a significant contributor to their overall growth and profitability. Now, let's talk about home loans. What's happening in that space?
Home loans are another growth engine for Cholamandalam, though on a smaller scale compared to vehicle finance and LAP. Their Q2 disbursements increased by a healthy 16% year-on-year, reaching 1,823 crore rupees.
Okay, so steady growth in home loan disbursements?
Yeah.
What's driving this growth? Is it the overall strength of the Indian housing market?
That's a big factor. The Indian housing market remains robust, especially in the affordable housing segment. There's a huge unmet demand for home ownership, particularly in smaller cities, and the government is actively promoting affordable housing initiatives.
So they're aligning themselves with a key government priority and tapping into a large and growing market. What a smart move.
They are. And they're leveraging their deep understanding of those rural and semi-urban markets,
Yeah.
which is where a lot of this demand is concentrated.
It's all about understanding your customers and their needs, isn't it? What about their asset quality and profitability in the home loan segment? Are they managing risk effectively?
Absolutely. Their asset quality in home loans remains strong with loan losses at a very manageable 0.4%.
Yeah.
And their profit before tax in this segment shot up by an incredible 79% in Q2, hitting 171 crore rupees.
79%. That's fantastic growth. It seems like their home loan business is on a solid trajectory. We've covered vehicle financing, LAP, and home loans, three key segments that are driving Cholamandalam's growth. Now let's shift gears to the insurance side of their business. Can you give us a recap of CMS GICL's performance?
CMS GICL, their insurance arm is performing well, steadily building its presence in the Indian market. Their gross written premiums for the first half of FY25 exceeded 4,136 crore rupees, representing a year-on-year growth of over 11%.
That's solid growth. But how does that stack up against the overall insurance industry in India? Are they keeping pace or lagging behind?
Here's the exciting part. Their growth is actually outpacing the industry average in key segments like fire and health insurance.
Really? So they're not just riding the wave, they're actually gaining market share. That's impressive. What do you think is driving their success in those particular segments?
Well, their partnership with Mitsui Sumitomo Insurance Group, a global insurance giant, certainly gives them an edge. They're leveraging that expertise and offering a wider range of products, which is appealing to customers. Specifically in fire insurance, they're benefiting from the growth of the industrial and commercial sectors in India. As businesses expand, they need insurance coverage for their assets and operations. And in health insurance, there's a growing awareness of the importance of health coverage, especially with rising healthcare costs.
So they're aligning themselves with key growth drivers in the Indian economy. They're not just selling insurance, they're providing essential services that businesses and individuals need to thrive.
Exactly. And the numbers reflect that. They've seen a significant increase in live customers, crossing 423 lakhs. And in the first half of FY25 alone, they sold a whopping 61 lakh policies.
Wow, those are impressive numbers. It seems like they're successfully expanding their customer base and penetrating the market. They're definitely a force to be reckoned with in the Indian insurance landscape. Okay, we've covered a lot of ground here, examining both their lending and insurance operations. The picture is very positive. But before we wrap up part two of our deep dive, I want to take a step back and consider the bigger picture. What are the key takeaways from these financial results? What do they tell us about Cholamandalam's overall strategy?
Yeah, if we connect these impressive results to the bigger picture, I'd say there are several key takeaways. First and foremost, Cholamandalam is on a clear growth trajectory.
Yeah.
Their revenue, profits, and asset base are all expanding at a healthy pace.
And that growth is being fueled by both organic expansion, like opening new branches and reaching new customers, and strategic acquisitions, right? They're not just growing from within, they're actively seeking out opportunities to expand their reach.
Precisely. They're playing the game on multiple levels, which is smart. Another key takeaway is their unwavering focus on risk management. Despite their aggressive lending strategy, their loan losses remain relatively low. They're being prudent and not taking on excessive risk.
That's reassuring to hear. It's a delicate balance between growth and risk, isn't it? You need to lend enough to generate returns, but you can't be reckless. It seems like they've found that sweet spot.
Absolutely. And that balance is evident in their commitment to diversification. Their portfolio spans a wide range of financial services, from vehicle financing and LAP to home loans and insurance. This approach spreads risk and creates multiple avenues for growth.
They're not putting all their eggs in one basket, which is always a wise move. What else stands out to you about their strategy?
Their deep understanding of the Indian market, particularly rural and semi-urban markets, sets them apart. They're using this local knowledge to pinpoint growth opportunities, tailor their products to specific needs, and build strong relationships with customers.
That local expertise is invaluable. It gives them a competitive edge over companies that might not have the same level of insight.
And finally, their strong financial foundation, reflected in their excellent credit ratings and healthy capital adequacy ratio, positions them well for continued growth and expansion. They've got the resources and the financial stability to pursue ambitious goals.
It certainly sounds like they're in a strong position to navigate challenges and capitalize on opportunities. Now, before we move on to part three of our deep dive, any final thoughts or insights for our listener based on what we've covered so far?
Well, there's one thing that caught my attention. Cholamandalam briefly mentions the impact of regulatory changes on their business. This raises an important question. How might future regulations shape the Indian financial services landscape? And what opportunities or challenges could those changes create for Cholamandalam?
That's an excellent point. The regulatory environment is constantly evolving, and companies need to be adaptable to thrive. It's definitely something for our listener to consider as they delve deeper into Cholamandalam's story.
Yeah, it's like trying to predict the weather, right? You can make educated guesses, but those regulations can change like the wind. So as we wrap up our deep dive into Cholamandalam Financial Holdings, what's your overall assessment? Should our listener be feeling bullish or bearish? Well, I'm not in the business of making stock predictions, but Cholamandalam's story is compelling. Their diverse portfolio, strong financial performance, and that deep understanding of the Indian market, all those factors point to a company with a bright future.
Cautiously optimistic, then.
I think that sums it up perfectly. They're definitely a company to watch. It'll be fascinating to see how they navigate those evolving market dynamics and the regulatory landscape in the coming years.
I'm adding them to my watch list for sure. Now, before we let our listener go, anything else that stood out from all these documents? Any final nuggets of wisdom or intriguing tidbits we should highlight?
One thing that caught my eye was their emphasis on technology and digital innovation. They're investing heavily in data analytics, artificial intelligence, even building out digital platforms.
So they're embracing the digital transformation that's sweeping the financial world.
Absolutely. They understand that technology isn't just a tool. It's a strategic imperative. It's about staying ahead of the curve. They're using data analytics to assess credit risk, personalize loan offers, and streamline their collection processes. They're even using AI to detect fraud and make those customer interactions smoother.
It sounds like they're taking a holistic approach, integrating technology into every facet of their business. They're not just dipping their toes in the digital pool, they're diving headfirst.
Exactly. And that's what sets them apart. The financial landscape is changing rapidly, and companies that cling to old ways will get left behind.
Cholamandalam seems to get that. Their commitment to digital innovation is a big plus. Okay, let's bring it all together. Cholamandalam Financial Holdings is firing on all cylinders. They've got a diverse portfolio, impressive growth, a solid financial foundation, and they're embracing technology to stay ahead of the curve.
Well said. It's been a pleasure exploring their story with you.
But as we've learned today, there's always more to uncover. As our listener continues their research, they should keep those potential regulatory changes in mind and how they might reshape the Indian financial services landscape, ultimately impacting Cholamandalam's journey.
That's a great point to leave them with. Something to ponder as they continue their deep dive.
Thanks for joining us. We'll be back soon with another fascinating exploration of the business world.